David Willem, our go-to guy when it comes to Tongaat. And today, Tongaat wants to suspend its shares. There's quite a story to all of this, Dave.
Alekias, thank you for having me. It's another very strange twist in what has been can only describe it as a tragic sequence of events for Tongaat, going back almost 3 years. And when I say we, I've been working with a group of shareholders, are really quite puzzled at this move because we're not sure what suspending the share does other than kind of sow panic or possible panic. It's like shouting fire in a crowded room. People tend to run for the door, and in this case, they're asking the JSE to lock the door, and we just find that quite puzzling. We think it's premature, to put simply.
Let's just go back a little bit. On the 24th of June, a chief restructuring officer was appointed, one Piers Marsden. I know Business Day thought he was almost like the second coming. They gave him a huge billing. Is he that good? I'd never heard of him before, but perhaps that means I don't move in the right circles.
Alec, look, I think it would be quite wrong for me to pass too much comment on him, seeing as I haven't personally met him. We have reached out. Our consortium has reached out to meet with him, and we certainly hope to be able to do that soon. Look, his background is that he is a senior principal in a business called Mattison Associates, and you may remember the name Les Mattison. He was the business rescue practitioner for Ellerins, and Piers himself has been a business rescue practitioner for a number of groups, as well as a pre-business rescue, call it turnaround specialist. So he comes with pedigree. For that there's little doubt. But I'm still again puzzled as to why would Tongaat do this now? This company has been in serious trouble for a long time, and it's almost like this was some sort of aha moment. Well, we need a chief restructuring officer, when we've been saying to the group that they need to focus on this issue far more diligently and far more extensively, and they just have really not engaged with people who have tried to help.
But this is an interesting point. If he's a business rescue practitioner, that's like an undertaker. You bring these guys in when you're about to get buried, or hopefully they can provide some kind of a Lazarus moment for the company. Is it that bad? Is it that far gone at Tongaat now?
I think it is pretty serious, and we've certainly been saying this for quite some time. The simple reality is that the business has got too much debt, and it can't carry that debt and service that debt in the current scenario. Now, I think there's a complicating factor that if you had a great business with too much debt, you can restructure the balance sheet, and the earnings will support whatever that restructured balance sheet is. Unfortunately, what's kind of happened here is that the operational performance has also decayed in the last while. So we've seen, Zimbabwe continues to get worse. The South African sugar business has certainly not performed. You remember, Alec, we spoke quite some time ago about the amount of cane that was left behind in the fields, which has hurt the farmers tremendously, as well as Tongaat. And, yes, the floods were a complicating factor, but, I think there are a lot of businesses that were hurt by the floods, and we've seen stories recently about the Herculean effort of Toyota to get their factory reopened. In tough times, you've got to just knuckle down and get on with things and get on with the business. So the business itself is not performing that well, but at the end of the day, this is about restructuring the balance sheet so there's a suitable level of equity and debt. And our view in the last 6 months was that the proposal, which was a massively dilutory capital raise with a kind of an attached takeover bid at a price that we didn't even know what it would be, because they said we'll set the rights issue price sometime down the line. It took 6 months for that deal to become apparent that it was not doable. And I don't think a rights issue is the appropriate mechanism right now to raise the kind of equity that's required. And so, the company's kind of gone from a plan A to a no plan. And that really is, we question and we argue that was, I think, quite reckless in a sense, because we should never have a plan A, especially when your life depends on it.
So now we're looking at a set of financial results to the end of March, which are unable to be released by the prescribed time, which is the end of June, or by the end of July. They've now told us today that's not going to happen because they need to finalize funding, long-term funding. So all I can see is if the auditors are saying we're not going to sign off on these accounts unless you get long-term funding, then surely that the auditors are telling us this company is bust unless something happens which the banks haven't been prepared to do up to this point. Am I being simplistic?
No, Alec, you're not. So I think there are two reasons why a company might not be a going concern. The one is that it's making significant losses, and the prospect of turning those losses into profits is not apparent. And the second one is liquidity. Liquidity can kill a business. In fact, liquidity kills a business a lot faster than insolvency. The old adage in banking is, that liquidity is like a heart attack. It hits you fast, and banks fail very quickly when it comes to liquidity issues. And then insolvency is kind of a slow, lingering process. This is, at the moment, has become a liquidity crisis because the banks, who are owed about 7 billion rand, have been waiting to be paid. And the company has been saying, well, we'll pay you as soon as we do the 5 billion rights issue. And there were two issues. Firstly, the rights issue was 3 to 4 billion, and then it kind of became 4 to 5 billion. One has to ask the question, what if they had done the rights issue in March? It clearly wouldn't have been enough. And I'm not sure too many companies get to do two rescue rights issues. That's a given. We know what happened with Able when they did a rights issue and it wasn't enough. So I think I must say it's a tragic day this for me, because there's been so many efforts, so many attempts to talk to the company, to talk to the board, and it just seems like this situation that, quite frankly, it had to have been known in June, and in fact, I would argue in May, that this was where we would get to right now, because anyone who understands the audit process, the auditors cannot sign off a set of financials, no matter how accurate they are, without a going concern assessment, because the financial statements are prepared under the assumption of a going concern. That's the first and most important accounting policy. If a business is unable to meet its obligations as they fall due, in other words, pay the creditors and the funders, the going concern assumption is now in question. Now, nobody can say that was not known last month, the month before, or for that matter, 6 months ago. So the banks have been saying, we'll extend, and they extended to 30 June, and that's it. And they're now saying, I suspect behind the scenes, and what was not said in the SENS announcement, is that the auditors said, we can't give you an audit report unless the bankers have rescheduled the debt or provided a subordination of the debt or have extended the debt. The bankers are saying, well, we're not prepared to do that unless you can show us a capital restructuring plan. And they say, well, we appointed a restructuring officer on the 24th of June, and that, quite frankly, is just too late. It's way too late. I'm, as I say, I'm appalled. I've been trying to, I guess, talk nicely about this for a long time, but this is appalling. I think this board should stand down, and quite frankly, we are appealing to the JSE today to not suspend the share. We don't think it should be suspended. There's a really interesting question here: is why should a company be allowed to suspend its shares because it's convenient? The share trading is the right of the shareholders. And, interestingly today, I've just looked, the shares have been trading today. As we sit right now, the stock is trading at 312 cents. Not good, but certainly higher than it was a few weeks ago. There's been small volumes, but the market is trading. And if they're shareholders who want to buy and sell, let them buy and sell. Why should the JSE suspend this share right now? I can't understand that. They're not in default. They suggest they might be in default, but the JSE, just because they don't think they can get the financials out, I'm not sure that's a good reason to then say, well, we're going to, because it's a little bit like saying, well, we're going to just we're going to go into hibernation and we don't want to talk to you people anymore. And we think that's wrong.
But the share price itself has been really interesting. The way that it has moved in the past week, starting at, in the past month, started the month of July at R2.60, went up to R4.77 on Tuesday after a company called Artemis Investments announced that it had a 10% or pushed up to 10% stake. Somebody must see some value in this.
Well, Alec, just to, I can't speak specifically on behalf, but I can say certain things on behalf of Artemis because I represent them. I've been advising them. So Artemis were firstly, they have been a long shareholder in Tongaat. They bought 8.5% of the company back in 2020 when the company was relisted. It's a South African company owned by a KZN family, and they are extensive property owners in the North Coast. They own a large portfolio of shopping centers and, excuse me, a significant property investors. And I've worked closely with Charles, who's the principal on this, and it was Charles and a number of other shareholders who went to the TRP to object to the rights issue. So Artemis is well known. It's been the leading, I guess, antagonist or party that have been saying, hold on, we don't think that shareholders have been treated right here. And to give credit to Charles, he's sunk a lot of money in legal fees to fight on behalf of minority shareholders. So it's well known that he voted against, as did a number of other shareholders, and he has been funding the process of the TRP, which we won. And he now added to that stake by another percent to get himself just over 10%. So it's not a. I know there were some reports about like this is a foreign company, White Knight, or an asset stripper, or a gold digger. That's not true at all. He's been a long-term shareholder. He's just passionate about this business and trying to do right by it.
Charles' surname?
Charles Leosides. And it's
okay, so
the company's well known in KZN circles. There's a website on them. He has made some comment. He hasn't spoken extensively because he's chosen mostly to use his advisors, and I'm one of them. I'm not paid for that. I'm doing it voluntarily. I just passionately believe in this company as well. And I have been, together with an attorney, we were driving the process through the TRP. And I have not been promised anything. I don't work for any money. I just happen to share a vision with him.
TRP Takeover Regulations Panel.
Yeah, the TRP is the Takeover Regulation Panel. And remember, just without going into great detail, one of the resolutions put to the shareholders was that Magister, who were looking to underwrite the rights issue, would, with a 2 billion underwriting, would essentially and most likely get above 35% of the shares through that rights issue. And so the company Tongaat asked, and Magister asked the TRP and shareholders to approve a waiver of the obligation to make a mandatory offer. That was initially approved by shareholders, albeit quite a number voted against it, and the TRP also approved it. We went to the TSC, which is the special committee of the TRP, and we argued that there were, in fact, a number of reasons why that shouldn't have been approved, and one of those was investigated by the TRP, and that is that there were various parties who had been trading in concert with Magister. We argued that those parties were related. We proved they were related. The TRP agreed with that and effectively changed its ruling to nullify the waiver. And as a result of that, the Magister and Tongaat cancelled the deal and the rights issue.
So you've got the Magister deal cancelled. You've now seen or you've now attempted or pleaded with the JSE not to suspend the shares after the company has requested a suspension of the shares. And so far, the JSE, well, it's only lunchtime on Friday, but the JSE has not suspended the shares, which Gavin Hudson, the CEO of Tongaat, said was procedural. In other words, he felt it was just you put in the request, and the procedure was the shares get suspended. So you've put a couple of spokes in the wheel. What are you hoping to achieve by this?
Alex, it's a good question, and it's something I've asked myself many, many times in the last 6 months: is why are we doing this? It's not personal. Um, First and foremost, I think Tongaat is a company with an enormous history. That shouldn't be that important. History might count to some people's sentimental, maybe, but it also has a very, very important role in the socio-economic fabric of KZN North Coast. There are approximately, depending who you ask, 350 to 400,000 people whose livelihoods and their survival depend on the sugar industry. 25,000 farmers, scores and scores of workers, and obviously all the direct employees of Tongaat, the milling operations. It's an enormous industry, and it can't fail. It simply can't fail. It's too. KZN has had the most torrid time in the last 2 years, and this would be a devastating blow to the region. I'm not saying for a minute the rest of South Africa is not having tough times, but this would be devastating because if anyone knows that area, there's little else other than a few game farms between kind of call it Stanger or Belito and Empangeni. There's just not much else. So it's critical. Why are we doing this? Well, we think, honestly, we think the company made a rush decision, one that was detrimental to shareholders in favor of the lenders and in favor of Magister. We think they got a deal that we didn't think was appropriate. And it was, we didn't think it was fair to all the stakeholder groups. I, Obviously, being a grandstand critic is of no value to anyone. We see that every week when the Springboks play, and everybody's got their view about what the coaches should have done. So you've got to have a plan, and I will say that we have submitted, and I personally have submitted extensive communication to the board, setting out what we believe would have been alternative plans. One of those we've made public quite often is that we think there are people that should be pursued for claims of damages, and that should be pursued aggressively. That wouldn't solve all the problems. Secondly, the banks and the lenders lent 12 billion rand to this company, and as we now know, the fraud that took place was not complex Marcus Jooste or Madoff or some of these other frauds that we've seen around the world. This was just straight up accounting manipulation. And lenders should not. I would be amazed, having been a banker in my past. I can't imagine that a lender would just take the financials, say, well, these are audited financials, let's lend on the back of this. They should have done their due diligence. And quite frankly, I believe, and we believe, that the lenders have some of the pain. They should shoulder some of the pain. They lent this money to the company. They made good returns on it. They've hiked the interest rates up tremendously now. And we think that some of the solution should have been a partial subordination or haircut of the debt, or a conversion of a portion of the debt into an instrument with future upside, like a preference share or a convertible debenture. That would have then given a greater prospect of investment appetite for investors. It's very hard to ask shareholders to invest 5 billion in a company when that 5 billion is going to go straight out the back door to the lenders. It doesn't leave the company any better. And then thirdly, we think there are assets that should be considered for sale, and we know of one very credible one, which is I've personally spoken to the guy, and there is an offer on the table for Mozambique. It would be foolish to just say on the face of it should be accepted, but it's a full value offer. In other words, put simply, from a desktop review, Mozambique, the offer is around 8 times EBITDA to raise about 3 billion rand, maybe a little bit more. A rights issue at 2 rand or 2 rand 50 is at a massive discount to fair value. And you're selling one asset or another. When you sell shares, and you know this from you and I, both Buffett disciples, when you sell a share, you're selling an asset. And if you sell it at below its intrinsic value, you're selling an asset at a discount. So would you sell a fully priced asset in the form of Mozambique, or would you sell your shares, your most valuable asset, at a discount to intrinsic value? It's a no-brainer. It's an absolute no-brainer. The math just doesn't even So I'm just amazed that the board has taken so long, and that offer was on the table since January, and they set it aside because the Rudland deal was obviously a better deal for them. But this Portuguese, what's an American listed, but they've got an emphasis on Portuguese investments. Well, sorry, let me clarify that. It's a Portuguese principal with investments in Portuguese-speaking African countries, and they seem credible. I don't believe that. I think it would be reckless to not at least pursue that, because Mozambique is a good business, but it's not the great business in this. The businesses that have the greatest potential for recovery are Zimbabwe and South Africa, for two very different reasons, but they have the potential for significant upside. And and I won't go on anymore. We put very substantial recommendations to the board, to the chairman, and we've just been politely told, no, thanks, we've got it.
So the way I'm reading what you've told me now, and knowing the history that you have with Tongaat, you went to the Tongaat board years ago and said there's problems going on here, long before Peter Staude and co were booted out. You've been following this story, being from KZN, being a chartered accountant, being close to all of this for a long, long time. But it appears to me from what you've said now that the guys now running the show are not actually doing the right things, and yet they're not even open to considering what, in your opinion, are the right things. Is that accurate?
Look, yeah, it is. I think it is. It's hard for me to say what they're doing because it's a closed door, and we haven't been allowed in, and the closed period excuse and all those things. But we can't see any evidence of like real progress being made in this company. Louis Vinzena, the chairman, left, almost with no notice, and they appointed an interim chairman. They appointed Piers Marsden. The disclosure wasn't entirely complete because they didn't mention that he was a very highly recognized and reputable business rescue practitioner. But that, as you said, is he an undertaker dressed up as a specialist, ICU specialist? I mean, at what point does he take his white coat off and put his black coat on? I don't know. I'm appalled. We've tried really hard to stay out of the public eye in the last 4 months because it's so important that we don't have unintended consequences to this tragedy. But I'll be honest, today I just felt like I think enough is enough, and I think just to correct one point you made, we haven't yet submitted to the JSE. We will be today. So we will be making representation to the JSE to say we think this is premature. But we also, I think the group of shareholders now are going to have to ask for a meeting with Tongaat and ask to be heard. And, I think the time for polite declining and that is over. We need a solution. And if we have to go and talk to the bankers, we'll go and talk to the bankers.
Why would Tongaat listen to you now?
I don't think they will. I don't think they will. So I think I don't think I'm seen at the moment as the most friendly visitor to Manzanyama. I think obviously the shareholders, if enough shareholders come together, and we'll be looking to I guess coordinate a group of shareholders to form a consortium, then they might have to. Just bear in mind, institutional shareholders right now, the PIC owns about 15%. PSG, who were the next biggest shareholder, have been selling down. They were the biggest sellers in the last 2 weeks, so they've sold down about a quarter of their stake. They're down to about 11%. And that is it. That's at an institutional level. There's Sanlam with a small stake, a couple of percent. There's pretty much no one else. This is widely held by individuals and some strategic shareholders, of which the Rudlands are still 15%. So they have a big interest. The consortium owns, I think, at the moment about 13 to 14%. But I think there's a lot of individual shareholders who are, they might be fully supportive of what's happening. I would be surprised if they are. So I think, this is one of those situations where I think shareholders should get up and act and talk. And they own the company. They should make something happen.
So are you saying enough is enough? The board must resign. The management must be replaced.
Look, I hate to say that because it's such a dramatic statement to say that, but I feel that if we don't get the ability to have a discussion, I'm not saying for a minute that I have all the answers, and I guess everybody has a right to assess your capability and your experience in a matter. But I think we've shown to the management team and the board that we have tremendously deep experience. Not only myself, but other people that have been helping. My brother-in-law ran Zimbabwe for 14 years. He knows the sugar industry better than I think anybody in this country. He's an exceptionally smart sugar man, and a number of people have offered to help. I think there's been a level of arrogance, and we can't understand why, and we really are puzzled at why. So, the idea of enough's enough sounds almost petulant, or it sounds almost provocative. I think what we are saying is we need to be heard, and we need to understand what this board and this company are doing for its shareholders and its other stakeholders. And I think it's time we actually demanded to be heard, not just write polite letters.
David Woolham, chartered accountant and activist against the current Tongaat operation, as you well know. And I'm Alec Hogg from biznews.com.